Good afternoon, everyone. How's everyone doing? Bit of a tricky day today, huh? In the markets. Can you hear me? Hello. Can I be heard? Can I be heard? Okay. Okay. Is that any better? A little. Okay. Is that better? Okay. Right. Not much follow through in some of the stuff we were looking at. All very creepy, trendy, boring, difficult, hard to navigate stuff, right? Anyone else feeling that today? Um, if we go across to the charts, then I'm not sure if all of you attended the. Yeah, it was painful, very painful. Um, so Yohei touched on it, and we spoke today in that get together, talking about China there, and the dollar essentially, which is due a correction, technically. Okay, we had that first red day yesterday. Started off as though we were going to get what we were looking for, and it didn't come off, did it? So this is the dollar. I presume everyone can see that there. Um, Ignore the sell buy stuff. I don't know what that was. I don't trade with DXY index. We use it as a reference point, and so essentially we are still front side of this trend. We didn't break the lows, the higher lows over here, which have now shifted up over to here. We were down there. So, unfortunately, we're still really unable to build much of a thesis. I'm looking to counter trend dollar, but we're just not getting it. Okay, great. Um, so where does that leave us for next week? Well, in the same boat really, from my methodology and way that I want to trade this market. The dollar is being propped up as essentially um, the higher for longer theme, which is basically the Federal Reserve keeping rates as they are, if not hiking. Um, this has not been far from the mind of traders all of this year, but um, in more recent weeks, months, building up to where we are now, the guidance from the Fed um, has been uh, has been taken by the market that they're about to pause and even cut rates. But that's kind of flipped on its head. The latest CPI report, futures have started to price in that rate cuts might not come until March 2024, um, which reflects the resilience in this US economy, um, and the pushing back of rate cut expectations. So this is presumably why this dollar is just hanging up there, right? It's obviously decelerating, but we're just not getting the follow through, which makes life difficult when we're trying to counter trend that dollar through the indexes, for instance, gold, and so forth. Um, Nevertheless, there's still going to be opportunities that we can get involved with, and given that, well, it's two-way really. I mean, you can look at the summer months as opportunities where there might be more volatility because there's less liquidity, but as we saw today, that just wasn't the case. I believe we looked at the US 30. I mean, look, I had a target all the way up in towards yesterday's highs, and it was looking pretty good at one point, but didn't come off, and we're just sort of ebbing along here. The Nasdaq took some time to catch up. There was an opportunity late in the afternoon, um, but again, no cigar, no follow through, and it looks like it's going to end the day flat or thereabouts as a doji. Perhaps that's the start of the correction. Um, but is it a weak low? I mean, if we can't even, let's have a look. Are we going to close above? I mean, we're barely. Yeah. I mean, if we can hold above yesterday's closing price, I'd like to see a bit of follow through, and that would give us a bit more ammunition for the opening of next week. Which, by the way, will be the opening balance for the week, um, which tends to be more of a sort of a consolidative feel to start off the week. There's no data. Um, well, we've got the Bank of. Okay, that would be an interesting one. The People's Bank of China, their interest rate decision, considering all that's coming out with regards to China at the moment, and what they might do. I don't have any background on that at the moment. That sort of surprised me, actually. I didn't see that coming so soon, but I can look into it and we'll talk about it. Uh, so this is actually going to be on Monday, Asia, so Sunday. I'll put out a video over this weekend because I want to go through this setup across these currencies, right? So I've got all these as hot for today, but it's the end of the day now. So I'm going to go through these currencies over the weekend. We'll look at China and the interest rate decision as well in that video. Right, so we've got a first red day scenario in the US 10-year yield. That's encouraging for us that are looking to buy the Australian dollar down low. That was an inside day today by the looks of things. And so what we may find, if we've got this, look, maybe this is the low for now. An inside day could be followed on Monday with a continuation trade to the upside. So that's encouraging that we've got what do you call it, a first red day scenario in the 10-year yield. We'd like to see that 2-year come off as well to really give us some conviction. And maybe we are setting up for Monday and Tuesday for the sell-off. Um, we've got this sort of triple top scenario on the hourly chart. We had that doji yesterday. Um, there's not very much momentum from the bulls. I mean, they're trying to hang in there. They're keeping this up high, but it's not very convincing, is it? So when you get this sort of wiki scenario, these candlesticks with wicks at the end of, well, what could be the end of a cycle or at the top of a trend at resistance, So just like over here, bang. That's what we're looking for. That candle there is what we were looking for today. Maybe we were too premature in expecting that. Maybe it's going to take a couple of days to build up and failures on the upside for us to get these moves. But that's the scenario that we're looking for. Right here, over here. Yep, okay. So I'm going to stick to my guns on that one. So are there any pairs that you guys want me to go through? I know Swissy Yen was a big mover. Sterling Swiss surprised some to the upside. Let me know what you want me to look at. Otherwise, I could just go through some pairs randomly. Or anything. Are there any questions with regards to um, trading styles? Um, just hit me with anything you like. It's Friday. Dollar, dollar, gold, dollar, gold. Right. Okay, gold. Right. Well, I've got an entry down low, which I'm going to take out now because it's the end of the day. And gold wasn't very well behaved for me today. Um, so it's an inside day. There was no real volatility. There were some signs of bullishness, but flipped on its head to the downside. Um, False breakout to the downside, perhaps. We've got this, maybe one of these scenarios, sort of, and then maybe up, back in, and continuation up, perhaps, that sort of thing. Um, I'll be monitoring this and looking. We've got prospects of a tap into this order block down low. And if we get that, I've put a 1884 spot 23 level on my chart for a stop below there to ride that up if it comes in to the downside. And I've picked that level as doing some analysis on the structure looking left. So if we take that out to there, let's get a good look at this for you guys. So I've put my area for where if the market breaks it, I think it can continue lower. And I've based it on on all of this structure in here, the point of control, and on an hourly chart, um, these lows, these closing and open lows. Um, I might want to reassess that. I might want it below the point of control. But I'll put another marking in there. Let's put it on that candle wick. And I'll make it an actual area of support. So perhaps I might want it below there. Anyway, so I hope that makes sense, right? So I'm looking at that area of volume, transaction history, and if we break below there, then perhaps there's not a lot. Well, we can get down to here, and then it's a free ride all the way. There's nothing really in the way until perhaps over here. We've got that sort of price imbalance between there and there. So maybe that's another area that we could fly through. So looking to take it long. Anyone have any thoughts on gold yourselves? This is going to take forever if I do that, so I'm not going to continue with that. Right. If you haven't done euro dollar yet, I'll do analysis on euro. Gold still looking heavy. Why do you think it looks heavy? Because we're on the front side of the trend. Let's go to another chart that's cleaner. Do. Broke below the June low. June. Here. June. Just low here. Yeah. Okay. Right below it. Okay. Yeah. Has it broken below it, or is it just really sort of pulled in? Maybe higher time frame traders. Is it maybe a fake out? I mean, it hasn't broken over here yet. It's holding. Um, I'd be of the mind that if it can't break that convincingly on Monday and Tuesday, with a firm close, then I think that's what we need to see. So, yeah, I agree with you that there are absolutely possibilities of this continuing. But today was an inside day so far. Um, so it's either going to go one way or the other, right? Obviously, but bullish confirmation 200 SMA. Smooth moving average or simple? Really smooth. Smooth 200. And which chart we're looking at? The daily. Okay. Well, I think that probably has a confluence with where I see support. 4 hour. Let's have a look. No. Weekly. Way off the scale. So let's put out there that perhaps we're going to get maybe a test below the June low, and if there's no follow through, a correction, and then the real test of the 200 coming into. Because I mean, at that point that will drag that 200 up a touch, but I think if it's going to break that low, then it might come into this order block, this area over here. I think if it's going to come down, it's going to come down. And that's the fundamental bias, isn't it? That Joachim was talking about earlier on. It's not much of a bullish environment for gold on the fundamentals. Again, it will be data dependent. We've got a number of hot data points coming up over the next few weeks ahead of the Fed, and of course the Jackson Hole next weekend, where could shake things up one way or the other. And in that regard, I think some short covering is in order, and that's what I'm looking for from gold. A drop in gold and some short covering in sorry, the drop in the dollar and some short covering in gold. The bullish order block looks more interesting. This over here. Yeah. I mean, if we get a full-on breakout, but in order for that to happen, we need we need to rebalance somewhat, I would say, and then in doing so, we'll be coming into the order block and see what happens from there on. Yeah, if we get there. I would say, I mean, whatever works for anyone, but the daily 100 and 200, I think, are the most key moving averages. They're the ones I think that the large institutions are going to reference. But I mean, the 20 is good. They're all good, but depends how you fit them into your trading strategy, right? So if they're part of your rules in a mechanical trading strategy, then great. And if that works for you, you've got an edge, brilliant. The 100 and 200 are certainly um, the ones that are predominantly used by the larger institutions. Yeah, there is a large difference. You've got the simple moving average, the smooth moving average, and the exponential moving average. I can't remember the ins and outs of how they're calculated, um, but the EMA is tighter. That's all you really need to know. The EMA is tighter. The smooth is, as it sounds, more leveled, and the simple doesn't have as many calculations as the exponential. Um, I think the EMA you could probably fit into your day trading plan, whereas the smoothed and simple you could probably use like as a baseline for your swing trading um, strategies. You know, to track the trend trading. Whereas with a say for instance a 20 EMA, you could lay that on your chart, and it might be your trigger to enter a fast moving market, right? So if it breaks the 20, or if you get 10 and 20 crossover, that indicates that the market is ramping up well, up or down. I mean, I've actually got a strategy built around that. What was it called? Uh, so, for instance, on an hourly chart, see if I can find something in here. Here's one currently playing out, so we can look at that. So, on the hourly chart, so gold in a downtrend. So there's the impulse. I'm looking for a at least a 38.2 correction, right? And we get that on this. And at that point, I go down to the 15-minute chart. So, so at this point, I'm not using any indicators. So uh, turn them off for the time being. So this is a break in structure in a bearish trend. So the thesis is impulse, correction, continuation, right? So I'm seeing that on the hourly chart, and my trigger to move down to the 15-minute chart to look for an entry is as soon as the market comes into the 38.2. So in this case, that's done that. So at that point, I go down to a 15-minute chart, and the rules are that I enter. This is MACD on the downside, on the down here. It's a MACD crossover. So when it's above zero, it's bullish. When it's below zero, bearish. But what I need to do is I need to see the black 10 EMA, which hugs the price. It needs to cross up the blue, which it's done already. So that's tick one. And then what I want to see is the black line cross back below, convincingly, the blue line. So it does it there, right? And the MACD needs to be below zero. So when did that happen? That happened on that candle, presumably. Can you get a crossover? Can't really see it. Let's go to the next candle. Right, there it is. So, and at that point, you make a decision, and you can put in your sell limit at the last low with a stop above, and you want to target the minus 272, which is down here, and you want at least a 2 for 1. Get that in this scenario. So this is a sell limit. So you get triggered when it goes in. That nearly hit the stop, but in this case it didn't so far. Is that where we are? Are we up to market speed? There you go. So this trade here in particular would be now running at break even because the market broke this level over here. So that was the low before the move up. So when it breaks that low, this is now regarded as resistance. So you can take some money off so that you're in profit, put money in your bank and keep it there, and let the rest run. Or you can simply just move it to break even and keep your fingers crossed that it goes to your target. There are several strategies that I've gone through over the years. You can, just to keep it basic for now, I'm going to do a course on swing trading. I'm just waiting for the green light. It's going to take me a lot of work, and it's going to be all singing and dancing, and production is going to be top notch and so forth. Shipping in a webcam and microphone and all that kind of stuff. So that's all to come. But you can apply these exact same rules that I've just shown you to a daily chart. So let's clean up this chart, see if we can find what we need to see. And it's based upon market structure and momentum. So what we're looking for in an uptrend moves up, 38.2 correction at least, and then a continuation. So, oops. So that's the top of the impulse. When the market comes down to the 38.2, I do exactly what I've just shown you, but we go down to the 4-hour chart, and then we apply the same rules. So let me try and find something that may have worked. So this one here, for instance. So on that impulse, that break of structure to the upside, I measure the impulse. And as soon as the market comes down into the 38.2, might have done it already on that bar there straight away. It's a bit premature, but okay. I mean, you want to see a few bars building up, but the rules are the rules. So as soon as it comes down to here, you go down to the 4-hour chart, and you note where the structure is. So this is the high of that structure. Red line for resistance, so that's resistance. And you slap on your EMAs, and you need to see the black line cross the blue line. So there it has it. And then when the black line crosses back up the blue line, it signifies that we are now in a bullish environment. The MACD has to be above as well, so we're good to go. Now you can either take it at market, or you could wait for the price to break resistance, and it's done it there, and then at that point you figure that, well, this is going up. Again, you can either take it at market if you want, or you can wait for a pullback, and again you're targeting the um, minus 272, and you need at least a 2 for 1. You can tighten it up for a 3 to 1 perhaps, and then you're looking for the pullback to trigger you in. Whether it does or not, I have no idea. It does here. It's very strong. And then you're looking for the market to return. There you go. Beautiful trade. And that took, but this, I mean, this for me, yeah, I mean, it just takes too long for me. I can do 3 hour on a trading session within an hour, and this you have to sit through days and a lot of chop and change. You have to be up in the middle of the night to gauge, because well, it depends on what your rule is, but if you want to gauge for a break-even opportunity, so for me, at that point, I would have moved the stop loss to break even, and that happened at 1 o'clock in the morning. So I'd have to get up at 1 o'clock in the morning and deal with this, and that's not really how I want to trade. So it depends on your lifestyle, your personality, your risk tolerance, and all sorts. But maybe that could work for someone, and if you want me to do a video on this, I can, but there it is for you all to see. Very, very basic stuff. Okay, no problem. But you can apply that to a day trading strategy, or, well, as I showed you on the hourly chart, which might take a day or two to play out. Certainly less time than the 4 hour and daily candles if you do it on a 1 hour and 15 minute. All right. So anyway, we were talking about the moving averages, and as I said, if it works for you, if you can fit them into a strategy with rules, then excellent. And you just stick to your rules, don't break them, and let the strategy work over time. And so long as you've got a reasonable hit rate, 40%, 50% is reasonable, 60, 70 is fantastic, and you've got a risk to reward ratio of at least 1 to 3 or 1 to 2. This was a 1 to 3. You could get 7 losers in a row. You'd be down in the dumps over that, but so long as you manage your risk, cut your risk, and then the next 3 trades can put you into profit. So anyway, anything else, guys? We were going to look at the euro, weren't we? So the euro. Blah, 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 blah. Yeah, I took this trade today, and I got out with a small profit because I was hedging my gold loss. But the euro, again, I mean, it's directly correlated to the Dixie. So what happens there, we get the complete opposite on the euro. So we were trying to break structure and it just didn't come off. And we're setting up for next week, looking for the breakout. On the 3-day cycle template, I'm looking at the daily closes, the inside day bars. Nothing there interesting, right? So, yet another bearish close by the looks of things. Um, so no signal today, no signal day today. If that was a bullish close, maybe we will end bullish. Then we can start, really planning for a move to the upside on Monday, Tuesday. But at this stage, we're still on the front side of this bearish trend. There have been no significant breaks of structure. Um, the most significant here on this hourly chart is over here. Had we got that today, then happy days and off we go. But the only structure that was broken was this internal structure over here, which was my trigger, which was my trigger to start looking for longs. That's why I got involved in the market, looking to break this high, but didn't come off. And we're jammed inside of yesterday's range, a little spike below. Maybe that is the peak formation, and perhaps we're going to come up on Monday in Asia, London, and set us up for maybe a parabolic continuation trade on Monday or Tuesday. Yes, of course, the video is going to be shared. Yeah, I'm recording, and it's going to be out shortly after we terminate the call. So, what do we say, guys? Anything else you want me to look at, or should we call it a day? Have a nice weekend, Blood Wish. Get some good rest, and we'll get ready to take this on next week. Perhaps next week will be an explosive week, or maybe it's just going to be very consolidative leading into the Jackson Hole. I would be of mind that we're going to get some short covering, so therefore long opportunities over Monday, Tuesday, Wednesday, consolidating on Thursday, getting set for Friday to hear what Powell has to say. So I think we need to be on our toes Monday, Tuesday, Wednesday. Dollar CAD. Right, dollar CAD starting to look as though it wants to decelerate and slide. We did get a sell-off, but we didn't break any significant structure. So at the moment, we're coming up into this M formation neckline. Perhaps that is going to serve as resistance into Monday. Perhaps we could apply the rules for a trade on this. So we've come up to that 38.2 Fibonacci resistance. Go down to the 15-minute. Maybe we're going to get a sell-off. So we've got the 10 EMA crossing up the 20. We need to see that cross back down, MACD in bearish territory. Break of support. break of support would be nice, and a short position to ride this lower into support areas. Maybe that could occur on Monday, but it does look like we're starting to top out here. Yes, we need to. There's a trend. We need to break. Just clean up the chart for you. Yes, there is relation. The Canadian dollar is correlated to the price of oil. Um, and we were talking about oil in our meeting earlier on, and talked about the prospects of a move up. So that's what we've seen. We broke that resistance and we burst through it. In fact, up into the 50% area. I think I was looking for a 61.8 retracement to test 82 the figure. So maybe that's what we're going to get, right? If we get that, then obviously that's going to play into our bearish dollar CAD thesis. So we need a move up in oil to support the bearish thesis in, or the bullish thesis in the Canadian dollar, bearish for dollar CAD. Does that make sense? So, uh, so on the right we have dollar CAD, on the left we have oil. Right, so as the price goes up in oil, the price comes down. Sorry, where are we? As the price goes, what are we talking about here? So this is dollar CAD, so going up and oil coming down, right? But over here with the price going up, hmm, that's not working out for me, is it? Hold on. One moment. Enjoy the weekend. Yeah, yeah, we've got elections here where I live in Guatemala, so there's a lot of noise outside. I live right next to the beach, so a lot of traffic and a lot of what do you call it, rallying up. A lot of rallies in terms of the elections are on Tuesday, on Sunday, so it's going to be a noisy weekend here. Right, guys, we'll leave it there then. Have a great weekend, and we'll see you on Monday. Cheers, guys.